good morning.
I wish it was good.
What's the
Thank you.
problem?
So it's been updating. I'm trying to log back in. I don't know what mistake I've done.
Is it Windows?
Yeah,
I think so. So maybe you give it time. What percent is it at?
I'll give it time. It was at what on the last check? It was, let me see now. You got like what, 40 something?
Ah, give it time. By the time we are finishing, it will be okay. So you're using a phone?
Yeah, now I'm using a phone.
Okay.
Yeah, now I'm using a phone. But normally I prefer logging in via Zoom.
Oh, okay.
Oh, sorry, via my laptop. Sorry.
Okay, okay. Then let's just use what we have for now.
Yeah,
So,
sawa sawa.
welcome to today's class.
Thank you so much. How you're well yourself?
Yes, I'm good. I'm grateful as
Mhm.
always. And yeah, I'm happy. All I'm thinking about is when will we finish this course? But let's try finish today's class and then the other one maybe we can finish on Tuesday. Okay?
Yeah, that's fine. But don't worry. I mean, you're doing something that will educate more people in the future.
Yes, yes, yes. So I was like, okay, it has delayed for quite a long time. And then when
Mm-hmm.
you start a project, you have to finish it, otherwise it's hindering you from starting new projects. So I was like,
Mm-hmm.
I wish you can finish so that even even
Mm-hmm.
even you can like move forward to maybe something else.
Mm-hmm.
Maybe even trading related, but I'm grateful because I can't complain. I don't have any rights to complain.
Okay, okay. Oh, that's cool.
Mm,
I enjoy the fact that personally on my side,
mhm.
I have been at least consistent in one attending the class. Wanasemanga showing up is what percent of success?
Let's give it 70%.
Yeah,
Then
at first I didn't think I would manage.
mm-hmm,
At first, I don't think I would manage.
mm-hmm.
Uh, but I'm so proud of myself. I've showed up for the classes.
Okay.
Yeah.
And I really love the fact that um we've come so far. We are just remaining this class and the last one, and then the follow-up
Mhm,
classes, maybe I will be looking for you after like 3 months and ask you how have you been doing and all that. So
mhm,
I'm actually excited so that we finish because it will already when I'm maybe in other meetings or in other engagements, I'm like, oh, I have a course because everybody is who wants me to teach them. I'm just like, I have a student with I had a class with Rahema, you can go check it on YouTube. So I love that about what you've done, and
mhm,
I'm grateful. I've played a role, yes. Also, you have played a very, very huge role. And
mhm,
yeah, so I don't know how to repay you, but I told you I will repay you with an expert advisor. So
mhm.
yeah, so a free one.
Wow.
And
Oh, that's generous. Thank you.
I told you in the class of algos, no? I don't know.
Um, I don't recall.
Okay, so yeah, so I'll send you a form and then
Mhm,
you can be using it as you continue, maybe putting in practice everything you've learned. So for today, um,
mhm,
let's do fundamental analysis. And I need to tell you this. I'm not the the
mhm,
strongest soldier when it comes to fundamental analysis for some
mhm,
reason. And
mhm,
and funny thing, it's economics and I studied economics. And funny thing,
Mm-hmm.
It's still one of the hardest things for me, but and maybe I don't know if it will be easier for some people. For some reason, the fundamental analysis is good and better for them. But for me, I find technical analysis being easier for me. So,
Mm-hmm.
but all the same, um, I'm gonna teach you what I know, what I've gathered from the few years of experience I've been utilizing the knowledge in my trading. And it's important because every trader should know, even if you don't know it to the highest profession, because again, it's a lot of economics. Even some of the things that I'm going to mention here, it's okay. This is like an economics class. I don't know if you've ever
Mm-hmm.
done anything related to economics in your schoolwork, but
I it, in my degree, but you see, it was one of those units. Wanasema maybe environmental economics one or two or energy economics, something like that.
uh
But not advanced with you guys for 4 years.
yes, one thing about economics is it's one of the hardest things. And the hard part is normally the putting two and two together, because it's just like it's normally model work. Like it's normally like let me put it equations. Like it's mathematicals putting one and two together to make C. A plus B is equals to C. So even if
Mm-hmm.
it's theoretical, I want you to picture it that, and you're gonna see it. That's why I'm saying it's one of the hardest things. It's debatable, but I find not many traders. I think many traders prefer technical than fundamental because
Mm-hmm.
it's purely economics. Okay, but it's not to scare you. It's very advantageous if you know some of the basics, because at the end of the day, the basics are always important, even than the advanced things in every field. So
Mm-hmm.
the basics will hold, they will stand the test of time. So, welcome to today's class on fundamental analysis. I will try my best to give you the best knowledge I have. I've tried to make it easy, by the way, because this class I have tweaked it like I think 5 times so that it can be
Mm-hmm.
easy to understand. But
Mm-hmm.
anyway, I hope it will be fully understandable. In case of any questions, just let me know. Okay.
All right.
Sawa sawa. So we're gonna start with interest rates. We're gonna cover interest rates, economic events, and market drivers. They're the main thing, the main aspects of fundamental analysis. So interest rate fundamentals. What I know you know about something to do with interest rates, because as long as you save money in a bank, you know what interest rate is. No. So
Mm-hmm.
it is the cost of borrowing money, the rent on money. So for example, when you take $100 to the bank,
Mm-hmm.
you are and you want to save it there, you are taking it so that you can earn interest. Otherwise, you would have put it under your mattress, you know. So
Mm-hmm.
like me, if I didn't take it to the bank, I would have put it under the mattress. Under the mattress, it would still be $100. That ka paper, that $100. But in the bank, it would have earned interest, like 5% interest. Why is it earning 5% interest? The 5% interest doesn't come from anywhere. It comes from somewhere. Money has to come from somewhere else. So people normally go to the bank to borrow money. It can be banks, it can be um, SACCOs in Kenya, ama microfinance institutions, ama chamas. You see, different places. So the people who have the money, they can't just give money like that for free. They want an interest, something, their money to make money for them. So
Yeah.
the transaction here is the 5% that has been earned from the loan. is given to you who has put that money in the bank. So basically that is the basis of money in the world. You're gonna see it come into play because some investors go and borrow that money and take it to maybe Nairobi Stock Exchange ama New York Stock Exchange to invest, and then whatever profit they make, they come and pay the interest plus the loan, and then the profit they pocket it. Ndio. So you're gonna
Mhm.
see interest rates. They are the most important fundamental in fundamental analysis. So I'm gonna just fly through the notes somewhere. I'll leave the notes, you can go through them, but I will just mention the most important aspects. So those who control interest rates are always the central banks. In Kenya, the Central Bank of Kenya, CBK, they're the one who control the the interest rates in Kenya. For example, let me just try to clarify. For example, last year we were making in the beginning of the year, let's say, we were making those who are saving their money in the bank, we were making 12% on our savings, si ndio? Kama ulipeleka money
Mhm.
market fund, bank ama wherever kwenye ulipeleka, ulikuwa na interest ya 12% on average, that is, si ndio? The person who set that 12%, it's just not nobody, because you see several banks will tie around there. So bank itasema nimewapea 11%, but since the banks normally have recurring costs like utilities, they have rent to pay for the buildings, they have salaries to pay, they have all the utilities, stima, nini, maji, hivyo. So they top up. So you'll find some banks will have cheaper rates and others more expensive a bit, but they were given a rate by the bank. So it's standard to by the central bank, which is standard to all. Sindio? Now we are in, let me check, we are in say October. I think the interest rate right now is 9%. Unaona imeshuka. Imeshuka na like 3%. So
Mhm.
the reason is the same. Si ati banks waliamka siku moja ama kaa KCB wakaamua tupunguze interest. No, it's the central bank. They set that standard and then the bank follow suit. Okay. Now, that
Mhm.
is important information because it affects all other financial institutions, financial related things. Now, I think I've clarified that. So in the US, the central bank is called the Federal Reserve, or the Fed. It's the most important, especially if you are trading USD pairs and gold and stocks from the US. It's very important. Higher. The Eurozone, we have the central bank is ECB. We have the UK, Bank of England, Japan, Bank of Japan, Canada, BOC, and Australia, RBA. By the way, I'm not sure if I'm recording. Let me just check. Am I recording? Rehema? 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 Hello, Rehema?
Hello, Pole, I'm back.
Oh, I was like, Connie, what has happened? I'm recording, by the way.
Let me see. Yes. You're
Okay.
recording.
Good. I was scared.
Mhm.
I've seen something has popped up. I was like, I didn't even notice you had left. Then I noticed the Nini. Okay. So for Bank of Japan is they're the central bank for Japan. For Canada is BOC and for Australia is RBA. So why central banks change rates? They have two main mandates. One is to control inflation, and the other one is to maintain employment. It's very, very important because those two carry the whole economy. So I want you to picture this. For a country, the central bank is like the money manager for that household. Like it's the country is a household. So you see things basic like housing, say electricity, utility bills, and you wonder why is it very important for the economy, ama for the finance industry. But it's the basis actually, because it gives us so much information. Because again, a country is like a household. It's a very big, large household. Okay. So
Mhm.
even and then it goes and have a ripple effect now to the rest of the world. So the whole world, just the way God created us, starting with Adam and Eve, like a small household, and then it goes, you have this whole world. And then now, once you have the whole world, which is normally macroeconomics, we now start going down, 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 down to the small world, sorry, the household, which is microeconomics. So in economics, we normally have those two studies, macro and microeconomics. Both are important because they interrelate with each other. The macro is dependent on the micro, and the micro is dependent on the macro. Okay, that's what, and you're
Mhm.
gonna see it. You may be wondering, why is CPI called Consumer Price Index important? Consumer Price Index is looking at things from the household point of view, the microeconomics. You are like, ai, hizi vitu za kawaida hizi za supermarket ndo zinaangaliwa kudetermine economic nini, uko like, ai, mbona, but that is the basis. So I want you to picture like the world ama the country as a big household, an extended family, so that you see the importance of everything. So
Mhm.
the two mandates are to control inflation. The sweet spot, ama the target for the Feds, we're gonna use the US for now because that's what most traders in the world use as reference. So we're gonna use the same. So it's they target 2% inflation. So when inflation is too high, when it's above 2%, that is 3 to 4%. So what happens in that instance? They raise the interest rates, leading to borrowing becomes very expensive. Remember, there are those who save the money in the bank, those are getting a lot of money. And then those who are borrowing, it becomes too expensive for them. So it's hard to buy things. So spending falls, and then inflation cools down because the prices are too high. So demand and supply, blah blah. That's a lot of economics, so we won't cover that. But that is what it means. So when inflation is too low, that is below 2%, like 1% and below. Now, what the Fed does, they lower rates, they lower the interest rates. Now, in this instance, those who are saving money in the bank, they don't get so much profit. They get lesser profit, so their profit reduces. So the people now who are going to borrow, they can now borrow money comfortably. And then, so now the borrowing becomes cheap, and then the spending rises, and then the economy now grows very well. Okay. I can give you a case point of Kibaki's time when he came in the first few months, or rather year. I don't know, is my internet okay on your end?
Yeah, you're okay. Yeah, you're okay.
Okay, so for like Kibaki's time, what happened? He reduced the interest rates so that borrowing can be cheap to 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 encourage the economy to grow. And that's how, from an economist point of view, because the economy was so bad, he had to encourage businesses to continue running. Okay. So that's a very, very good
Mhm.
thing. And you can see right now, that's what this regime is trying to do as well. They're trying to reduce the rates so that businesses can flourish. Because again, you see, like last year and the beginning of the year, the economy wasn't that good. Cinder. Businesses were closing down,
Mhm.
it was becoming very expensive, blah, blah, blah. So to encourage the economy, they are reducing the rates. So maybe if they don't get the target of maybe 9%, they may go as low as 7%, ama 5%. No. So that's what it means from a trader point of view, from an economist point of view. That is what it normally means. Now, I think the perfect ama the ideal rate should be around 2%. Again, this is for the US economy, whereby they hold rates, they hold the interest rates. Maybe it can be for 5 years. They maintain that balance, and then we have a thriving economy. The other mandate is to maintain employment. Now, this is a major thing, and you're gonna see why. So they target 4% unemployment. So they want everybody in their country to be productive. Okay? And that being productive has to come from businesses being able to thrive, and then they employ people and so on and so forth. For example, the AI. People are like AI is not good because what will it do? It will increase unemployment. Sindio? Because businesses will be cutting their staff. You see, that is negative. So you see people are encouraging, no, we have to control the AI. We can't let it work for, they're not just saying that for some random things. No, they're saying that for good reason, to protect the economy. Otherwise, things will crumble. Even if some businesses are making billions and people are suffering, it won't work well. We need a balance at the end of the day. So, for example, high unemployment is normally above 5%. So what the Fed does, they lower rates, the interest rates, to stimulate the economy and create jobs. Unaona? So, for example, Kenya sahi tumepunguziwa rates because like 3% or so. The reason for that is they've seen, hey, the unemployment has become so severe, we need to control the economy. So they reduce it so that businesses can go and loan, and then those businesses, they employ people. Okay, that's why. So and then the other one is low unemployment. Now, when the unemployment is like 4% and below, they just need to monitor the inflation and may need to raise the rates. So what happens this time now? People can now go and save money. So basically, the economy is cyclical. It's not at a flat in one way. So there are times when it goes up and there are times when it goes down. And it does it very naturally. And it has done that since the world began. I think it is engineered in the way the world does. So that's why we say when things are good, enjoy and save that money, do good things with that money, and then expect there will be times when things will not be good because that is nature. You can't expect things to be good always forever. Sindio? The same way. The golden rule is higher rates equals stronger currency, the respective currency that is, and then lower rates leads to means weaker currency. Why this happens? The money flow logic. A US bank charges 5% interest. So if they were loaning if they were loaning $1 million, they would make $50K in return. A Japanese bank, they are very well known for low interest rates. They charge 0.1% interest rate, and then in that same $1 million, they will earn 1K. You see, so the result is the investors will sell the JPY, especially if they are in Japan, and then they go and buy the USD. So the demand for USD goes up. So meaning the USD strengthens, and then the JPY supply goes up, the demand goes down, and then the JPY weakens. So there's something I'll send you to go and research. It's called carry trades. This has been done historically, and it's well taught in finance and economics. It's called carry trade, and it was done mainly by women. So they used to take advantage of the interest rates in Japan, the low interest rates in Japan, and invest in stronger currencies, and they will make so much money doing that. That's how they will make their families rich. And they were not at well educated, so much educated. They were stay-at-home moms. So I will send you to go and read more on that. I see there's a comment in the chat. Carry as in carry trades. Yes, carry trades. You can go and read more on that. Sawa. Hi, any question
Okay.
up to there? Any question?
I think we are good.
Okay. So interest rate differentials, what matters is the gap between countries. So if you're strictly a fundamental analysis trader, what you'll do, you'll be looking for gaps between the countries. So if you're trading USD, JPY, you just look at the gaps. So let me just give you a brief example. So US rate is 5%. Japan rate right now is 0.1. The gap is 5%. That would mean the USD JPY direction is an uptrend. Higher. Then we have 3% US, 2.5% Japan. The gap is 0.5, weak trend. And then 2.5, 2.5, zero change, no change. It will be ranging. So those who are trading just that, based on that, that is what they would use. So for example, whatever trade they take, of course, there'll be reversals and retracements and those all that. What they would do, they would know, okay, it was announced these are the rates, because it's the central banks who normally announce the interest rates. They would say now, since the market is going to the rates are like this, let me look for long trades per K. So that's why you'll find some traders are like, I'm a short trader. Like in 2025, I was a long trader. I was just placing longs. This is the reason. So same case, when the time comes, maybe 2022, I was a short trader because that was the effective thing. So haikutoka tu anywhere, ilitoka kwa hizo fundamentals. So trading rule, watch the gap widening or narrowing, not just absolute rates. So that is the information they need. Higher rate expectation, they drive markets. So I'm just going to cover this just juju. So there are three. So first of all, markets trade expected future rates, not current rates. So rates zinapeanangwa 6 times a year. So the last time zinapeana like few weeks ago kulikuwa na rates. Powell alikuwa amesema hata guza anything for now, but alikuwa ana expect this and this happened. So hizo haziku affect sana hiyo time, but utaona market itaanza ku consume that information and putting it out in the market, the traders now. So there are three scenarios. There is priced in markets. Some of these fundamentals are already priced in by the traders, because remember in class 1 I told you the traders are the ones who control the markets. They do the price discovery, sindio? So information yote si ya Fed, ni ya traders, sawa? So what happens, there's also the hawkish surprise. I'll leave just the notes one, and then there's dovish surprise. So hawkish, hii language ya hawkish and dovish inamanishanga nini? Hawkish, it's tough on inflation. It means rising. The currency is stronger. Inflation risk and tightening needed. So the keywords is inflation risks, tightening needed, blah blah blah. Utasikia tu kwa hiyo language ya hizo meetings. Dovish, supportive of growth, lowering of rates, currency is weaker, and then growth concerns. Utasikia keywords like growth concerns, accommodative, blah blah blah. Kuna hiyo lingo. It's not so important, but you need to know there is. And then there's neutral, data dependent, steady growth, utasikia steady rates, and then the currency is stable, monitor conditions and patience. Kaka venye nani alisema, Paul alisema juzi, alisema let's be patient, we want to do this. So ukisikia akiongeaongea hivyo ndo anamaanisha. Tools to track the interest rates expectation, you have CME Fed Watch tool, You can go, I'll leave the links, you go and check them out. They show probability of rate changes. Central bank meetings schedules, 8 meetings per year. Ilikuwa 8 meetings and then it's done every 6 weeks. Economic calendars like Forex Factory and investing.com. So I see you have 7 minutes remaining. So let's quickly cover inflation. Rising prices over time. So coffee unajua tu ilikuwa $3 saizi 4.5. So tume lose 33% of our purchasing power. The 3 types of inflation. So there's demand pull, whereby there's too much money chasing goods. So for example, time ya COVID kulitolewa stimulus. So businesses were given stimulus checks. So people had money. There was high demand for goods and not enough supply because of the pandemic. And then prices rose. So this brought inflation. The other one is production cost rises, like oil prices spike. So for example, price ya oil ikipanda, unaonanga the reason why prices zinaendanga juu ni juu transportation inapanda, mainly inakuanga ni juu ya transportation and maybe secondary ni production huko kwa factories. So transportation cost goes up, all goods cost more because all goods have to be transported from point A to B to reach the end user, the end consumer, and then inflation rises. So an example is the energy crisis led to prices soaring. And then there's built-in, that is wage price spiral. So prices rise, workers' demand raises because they need to afford these new prices that have risen. And then businesses raise price in turn because the workers are demanding higher wages. And then the workers demand more. So inaendelea hivyo. So itaendelea kucause a stagflation e.g. in the 1970s. So that has to be controlled. All that work is done by economists. By wenye wanawakingi kwa central banks wengi wao wanakwanga economists. Sawa? Haya. So how inflation is measured? CPI. Hapa sasa ndo I'm sure umesikia CPI. CPI is the Consumer Price Index. It's an index, like a basket. Ukisikia word index, like in the Nairobi Stock Exchange, so ukisikia an index, ni a basket of several things that are related. For example, CPI we have housing, food, transport, and medical and other, like education, recreation, and all that. So the one that takes majority is 42% housing and the rest. So there are 2 types. There is headline CPI. It includes everything and it's very volatile. But yenye sisi sana sana tunaiangalianga juu Fed ndio inaangalianga sana ni core CPI. So hapo hivyo kwa Forex Factory, hebu tutaingilia later before the class ends, we look at it. There is that core CPI, inaandikanga tu core CPI. Hiyo ndio unafaa kuangalia. It excludes food and energy. Sawa. So then inflation targets. So you can go through. I don't know if I need to go deeper into that because time is not on our side. But the inflation and currency impact. So moderate inflation, central bank raises rates, currency strengthens, and then it becomes controlled. High inflation, 8% plus, central bank panic hikes, loss of confidence, currency weakens, and we have an example of Argentina and Turkey. So before we go to the next class, I think I've missed something. So the inflation target, 0% deflation risk, that is the economy is stagnant, haigrow, hakuna kitu inaendelea. 2% is the sweet spot, as I had said, good. And then 4% is too high. And then ikifika 8% ama 9%, because US walishaipata 9% during COVID. that is crisis. That is a very, very bad thing. So that's how it is categorized. Now, I want us to go to the next part, which is money supply and quantitative easing and quantitative tightening. I know umesikia quantitative easing sana. Hiyo ndo unasikia many traders inasikianga, but there are two, there's quantitative easing and tightening. So before you start,
I had it early in the year and I didn't know what was happening.
yeah, yeah. So, uh-huh.
Yeah.
Okay.
So what is it? What is quantitative easing?
So quantitative easing is when the Fed, the central bank, is gonna give out more money to help control the economy. Okay, first of all, you need to understand money supply. Money supply is the total money circulating in the economy. Look at the economy like a swimming pool, whereby more water means more money. Each drop becomes less valuable, leading to inflation. And then deflation is less water, less money. Each drop is more valuable, and then so quantitative easing um inakujanga is a result of the central bank trying to help the economy. They use one tool like venye tumetoka kudescribe hapo juu, interest rates. So the second one, they use quantitative easing where they print more money. Okay, so kama time ya COVID interest rates hazingesaidia hiyo time, unaona. So what they did, they had to print more money and give it to businesses. Wakipeana pesa wapeangi mtu wa kawaida, wanapeanga biashara, because biashara end up kutengeza kuemploy watu. Sawa. So we have less than a minute. Let's see if we can cover just that. So when in crisis rates already are at 0%. So it wouldn't help interest rates. So how the bank does it? They create digital money, they buy government bonds, the money enters the economy and it stimulates the economy. Stocks normally, the effect is stocks go high, currency weakens because they've done a bad thing to their currency, and then gold rises, and then real estate booms, and then inflation. There's a risk of inflation. So they do this. It doesn't need to be a long-term thing. It's just a short-term thing. So, for example, the the 2020 pandemic quantitative easing. Let's continue in the next class because I don't think there's enough time. Let's finish. I hope we finish in this class. Okay, so now I hope you've understood quantitative easing. Have you understood quantitative easing? Where Feds, the central bank, they print.
They print money to sort of like control the economy or to sort of
Yes, to help control the economy. So it only comes when they can't do like when the interest rates won't help. Remember the first one we said is interest rates, India. So when that cannot work, they go, which is a hard decision to make. It is temporary decision. Interest rates are more like a long-term decision, but quantitative easing and tightening is normally like a temporary resort. There's some background noise on your end. I don't know. Is it okay?
Is it better now?
Yes, good. So they end up now printing more money. Now the opposite is normally, which is the third tool they use, is normally quantitative tightening. Okay, when the economy is overheating, inflation is too high, even lowering rather putting in the interest rates won't do anything. They now they resort to quantitative tightening. So how do they do that? They stop buying bonds. They let bonds mature quietly. The money disappears, and then they put in tightening conditions. The effect of that is the stock market falls, the currency strengthens, the gold, which is very important, falls, real estate cools, and inflation goes down. So that's the journey of all these things. For example, now the result was the quantitative tightening by the Fed in 2022. They reduced they reduced 2 trillion from the system, and S&P 500 went down by negative 18%. The dollar index went up by 27%. Inflation came from 9.1% to 3%. I think I didn't tell you the effect of quantitative easing in 2020. The Fed created $4.5 trillion by printing money into the economy, the US economy. S&P 500 went up by 115% in 18 months. So many investors made a lot of money. The dollar index went low by negative 12.6%, but inflation went from 1.4% to 9.1%, which is a crisis. Okay. You see, that's very high.
Mm.
Yes. So now, just a moment.
But I think Trump was blamed for doing that.
No, he's not the one who did it. It was the other regime who did that. So
Oh.
yes, yes. So he's not the one who did that. So quantitative easing versus quantitative tightening, there's a comparison. You can read it on your end because it's just repeating what I had said. So let's go to part 4, major economic events. Now, here's the complete calendar. I've put it in a table format. The first one is interest rate. As I said, it is very, very important, critical information to traders and to the market. Rate decision, it is the frequency of those fundamentals is every 6 weeks, and there are 8 in a year. The time you can check the time, but if you have the economic calendar, you can just pick it. The impact is so high. NFP is non-farm payroll, which is in relation to unemployment monthly. Every first Friday. Very, very huge. It has very high impact. The other one is CPI, monthly, every 13th. If it's not 13th, they carry forward to a certain day that is relevant. But it is also high impact, but slightly lower, just slightly. GDP, it's done quarterly, like GDP of Kenya, GDP, blah, blah, blah. But for the US, it's done quarterly at the end of the month of every quarter. So 4 in a year. Very important. Not so much move, like the information not like push the market so high, like the other 3, but it will do something. PMI, very important. It's also done monthly, the first to the third day of the month. Higher, not so much impact. And then retail sales. The other honorable mentions like unemployment claims, you can also read more about those, but they are very important. So the cycle every week has some sort of news, so you need to organize yourself accordingly. So we have PMI data, NFP. Week 2, CPI, retail sales. Week 3, housing data, FOMC, also very important. FOMC is like, and Fed chair speaks, very important as well. I've not listed them here, but they're very important. You'll see, your calendar will tell you the red folder news. And then you have week 4, durable goods, consumer confidence, and so on. So the big 3 events are the central bank rate decisions. As I said earlier, they happen after every 6 weeks. So you can check with them. I've left some notes because of time, and there's some things I need to also discuss later. So non-farm payrolls, three numbers are released: job change, unemployment rate, hourly earnings. Very important. Why it's huge? Shows economic health directly, influences Fed chair decision on the employment mandate, most unpredictable and highest volatility. So this one you have to like, you can't say this and this, like you won't know exactly what to do. So that's why people are told don't trade during the news, but after the news, that information is very critical. So here's how you can read it. I'll leave the notes. You go read them. Then CPI, two numbers, headline CPI and core CPI. We focus on core CPI. Why it matters: central banks, number one focus, determines rate decisions and shows if policies are working. So reading above expectation, Fed may hike more, so the dollar may rise. Below expectation, Fed may pause or cut, and then USD goes down. Hi, and then the other one is real example, Fed rate cut. So we have scenario one, they cut rates by 0.25 basis points, 0.25%. For regular people, it's good because mortgages become cheaper, car loans become cheaper, credit cards slightly cheaper, so it's easier to borrow and spend money. It's bad because savings earn less, uh, we get pay less, and then dollar buys less. CDs, I'm not sure what I wrote there, but yeah. So the Fed goal is to encourage spending and not saving in this point in time. And then market impact, you see the movements. So there's somewhere I needed to tell you the important there are pairs that are safe havens, and this is where it comes in. But anyway, so market impact on things like USD, it will go down. Euro USD up, gold up, Bitcoin up, S&P 500 up, bonds up, and so on. So again, timeline of events, and then the next 24 hours after the news release, global markets react, and then next week, trend solidifies or continue doing what it was doing. The other one is geopolitical events like wars. So immediate reaction, day 1 to 7, war breaks out. So there's panic, and then we have safe haven like gold, CHF, and JPY. Oil, they go up. So stocks go down because of panic. Safe havens, currencies, and all that, they go up. Oil goes up, and then conflicting currencies, the one that the people who are fighting or are related in fighting, they crash, and they crash huge. So you can take up on that opportunity. Case study, we have the current war. I won't mention the names, but you can read it for yourself and the timeline of some of the events. So identify it's not good to trade on wars, but if you are willing, you can also do that. So identify the combats and the connected countries, and you can trade based on that. Their main commodities, and then look at the safe haven flows, the sanctions, the duration. Those are important factors to look at. How pandemic affects the market. That's also another thing. Like the most recent we saw, stocks went down, and then oil went down, and then the USD surged, and then gold falls, then rallies. So this was delayed information, like delayed outcome, and that was phase one, the first few weeks. But the next few weeks, things changed. So the rates went to zero, and unlimited quantitative easing, the stocks went up, and so on. So Yeah. And then the side effects, you see inflation, volatility persisting, and eventually Fed tightens and start removing, they start doing the quantitative tightening. And then tariff wars, like the most recent, but we're gonna reference the previous ones. So you can also look at that. So maybe if I can, I don't know if we have time. I don't know and Trump is well known for tariff wars. He's very well known for that. Even in the previous regime, he did that, and he's doing it again. So you can read it in the notes because I say I don't have enough time, and I want to complete in this class. So the final one that I would like us to look is the 2008 financial crisis. It's very, very important. Uh, And why is it important? It's a very major event that happened in the US economy and globally. It created the quantitative easing era, which is still in effect till to date. It shaped all current regulations. It changed central banking forever for major nations. And the lessons they prevent future crises. It was bad, like literally bad. Even to date, people talk about the 2000 in almost major countries. So the story, let me give you a condensed version. So the dot-com crash, then the Fed cut rates to 1%. Then housing became, because again, when you cut rates, it's easy to borrow money. So the housing market was booming. So prices went up because there was high demand for housing. And then there were loans given. So the loans were given without checking, doing the, what is it called? Doing the due diligence. So people with no income, no job, no assets were being given the loans, the mortgages. So it made housing go even up. And they believe still, even today, like in Kenya, you will always say that your lands will go up. But even when I was in school, we used to argue with my friends, and they tell that's impossible. Look at 2008, what happened? You can say an asset can go up forever. Like it's impossible. It doesn't even make sense. So that was a very good argument, and you can see it play. So the what happened is after that, so the mortgages were back. They created mortgage-backed securities where banks sold mortgages to Wall Street. Now they took it to the financial market, and Wall Street bundled those things together, and then they sold it globally. So countries, investors from Japan, from China, from Europe, they went and bought those investments in the hopes that whenever you invest something, it will go up. Then what happened is they fell because now again, remember, it's like a household. People are not able now to pay for the loans, the mortgages, because there was no money to pay. They were just buying housing, left, right, and center. So what happened is the market collapsed. So there was a very big investment bank that went under and went bankrupt. So it created a ripple effect to the rest of the world. Because remember, different investors all over the world were investing in such things. So the collapse, housing prices peaked, they stopped rising, defaults surged because remember, people are unemployed, they didn't have money, they didn't have good collateral, and so on. So those funds that were created in Wall Street, they failed, and then they just dropped. So it happened like an apocalypse. And then when investors now, you can imagine like all those the investors in Nairobi Stock Exchange, they the investments go down under, like that's very huge. It will affect the whole country, even if there are only few investors there. It's because that is considered one of the safest ways to invest money. So you can imagine. So the financial system nearly died. Like it affected like literally people are bankrupt, people lost jobs. It was bad, bad. And it was not only in the US, but in the whole world. Okay? Even there are movies made
Yeah.
not
Mhm.
only in the US, but the whole world. Yeah. So
But what do you think like Africa Kenya if it was that affected? Ama because we don't invest in those markets. Ama it's the dollar rate that was affected.
yes, yes. Everybody in the world was affected in one way or another. Some were affected more than others. Because again, you see, if Kenya, a bank like KCB, what they do is um some of their investments they take it to foreign countries, sindio? So of course it will affect us, sindio? So you can imagine all those big banks in the world, they would invest in the Nairobi because the New York Stock Exchange is the biggest in the world. And many banks all over the world they invest there. So you can imagine the ripple effect that happened. So it affects even in small countries like us. But we didn't see it so much. But as we were kids, then I think we were kids. I think I was so young.
Mhm.
I was still in primary if I'm not wrong. But we couldn't nini. But if you go back to the data, you will see it was bad, bad. Okay.
Mhm. Mhm.
Maybe for us it wasn't that bad because Kibaki was also our president. So it didn't affect us that much, but it was felt. It was felt at that time. So
Okay.
so yeah, so and then the rescue now what happened? They there was a bailout and then cuts to the Fed cuts to 0% interest and lends $7.7 trillion. They created the first quantitative easing, providing 1.7 trillion to the system, and then the system, that is the Fed, saved that damage. Now you see, at the end of the day, if you realize the Fed at the central bank is like the big brother of the economy, like it's the big brother, yani ya kusave watu huku chini. So yeah. So and then the damage, it was so bad that housing went down 33% nationally. Many jobs were lost, leading to 10% unemployment in a developed country. You can imagine that. Wealth went to um 11 trillion was destroyed. That is so much wealth, by the way. That is so much wealth. I think even that was so deep.
It's a lot.
That's a lot.
And and there's nothing people could do, like
Nothing,
you just
nothing.
take your L's.
Yes, nothing we could do. And it was just a simple grid, some grid that was between the banks and Wall Street. So the recovery
Mm.
took like 5 years to break even, at least to bring people back up. And then gold was still winning. So gold, yeah, forever in human history will always be a safe haven. So gold won and also oil won. So the moral story, the moral lesson is banks passed the risk to Wall Street and kept the profit, but they were being greedy. And then the leverage was killing the economy. And then all these other factors, the bubble always pops. This time it was different. It was unanticipated. Like it was it was bad. So you can read more on the lessons and then modern parallels now I think more than how many years, 12 years later, if I'm not, I don't know, I can't count. Oh gosh, how many years, like eh, I think 20. No, I just got 20, just some years
Like
after.
15 plus.
Yes, 15 plus years later we have crypto. So over leveraging, private credit which is unregulated, our kina those lending apps and Sherlocks, commercial real estate becoming less, people are working from home, auto loans, um too much things, but it doesn't mean, because we have to be very careful moving forward. It was a special case, that one, because it had never happened before. So the differences, we need better regulation, and then we need to stress test. And then new crises never look like old ones. Yes. So, for example, there's 1928. Okay, there was that in the early 1900s. There was the Great Depression, similar. It has never happened before because we learned. So you see, we got a new version which we had not learned. Maybe there will be another one that we have never experienced, but it will be similar, but not anticipated. So yeah, like maybe the AI and all that. So I think we're almost done. Economic calendars, you're gonna see Forex Factory, investing.com, and trading economics. You can choose the one that you feel has good is friendly for you. Live streams. This is one thing you can be addicted to, especially if you like listening to the to Powell. We have the Federal Reserve website. They broadcast live there. They also, you can search on YouTube, Federal Reserve. They have that, and then you can see the schedule. You can check the URLs for that. Same case with ECB, the European Central Bank, YouTube channel and website. Bank of England, the website only, and then economic data. You can check. I've left the sources. News sources, we have the Free Quality, we have Richards, Bloomberg, CNBC, and MarketWatch. And then you have Prime, which you don't need to pay for, Bloomberg, Richards, and so on. Rate tracking, we have CME, FedWatch, Central Bank website, and economic calendar apps. So it looks like a lot, but it's manageable. You can do it with practice, but start somewhere. So to summarize the core principles, you can read the summary. I think I don't need to go through, and then you can have your daily workflow. I normally like to say, look when you have high impact news, red folder news, and then note the time, and then just know when to trade, know when not to trade, because price moves like nobody's business during those time. Priority event, again, central bank rate decisions, non-farm payrolls, CPI, and then final thoughts. Yes, and then you can read all this when you have time. So I want us to go to because I need you to set up. So for Forex Factory, there we have it. So this is the website. I don't know if you went and did the homework. uh, so Rehema, hello.
Oh, I'm talking to myself.
Oh,
Yeah. Um, I'm saying I did like 60% of it.
no
I
worries.
still need to go
60%.
again.
60% is good, very, very good. So what you can do is you can come over here and then filter. So you can filter expected impact, red folder. So mingi zinakwanga zimetolewa all this. So you just pick this. This gray one is bank holiday. In that day, there's bank holiday. So me, I like to pick all of them. And then you want to see what they are going to speak about. There's growth, there's inflation, unemployment, central bank. Sa hapo ndo wanaongelea interest rates, bonds, housing, consumer surveys, business surveys, pitches, and miscellaneous. You can pick the currencies that you want there and then apply filter. You just click apply filter and it happens like that. Then there's tentative. The US government was shut down, so gava ya US haifanyi kazi, sijui kama wali reopen. So some of the news are labeled tentative. Tentative inamaanisha they don't know when yes, they were scheduled, but they don't know when they are going to be released. So there may be delay, revision, ama cancellation of those events. Sasa.
Mm-hmm.
So And then the next thing you need to do, for example, today we see there's no high impact news, so you can trade safely. You come tomorrow, you see for EUR, Euro, there's German something, and then you have CPI. So when you're coming to look at CPI, we look mainly for core CPI. Hii CPI ingine na hii CPI ingine iko inclusive like na food na all that. But for hii na energy. For core CPI, hii ndio Fed sana sana wanaangalia. So what you do, you come here and click it like that and see more information on that. So you'll be seeing atika inakuja inaonyesha tan. I wish kungekuwa na news inakuja ndio unge nini, but you can read this. If you don't understand, what you can do as well, you can copy this and take it to ChatGPT and tell it to explain to you some maybe like 1 hour before the news, and then you see the way forward. Sawa. So what else? So you come again, look, is there any other news? So in this case, as a trader, ikifika 3, hii ni 3 Kenyan time. So ikifika 3, kama ulikuwa na trades open, afadhali usizime before this 3. So by 3, before 3:30 that is, by 3 ukuwa umezizima, ndio zisi affect. Same hapa kulikuwa na news zingine which is PMI. Very important, but hii ni ya GBP. Ka ulikuwa na trade GBP, you 30 minutes earlier you close all trades, and then you trade like 30 minutes later. Sasa so and then follow now. The way you trade is you follow now market structure, your system too normal. So hakuna kuchange anything, you just follow. Ukiona support and resistance, price imekuja support and level na reject, imekupea confirmation candle, just enter, just normal. That's what I like to do myself. But 30 minutes before, 30 minutes after, stay away from any of those. Kama umesahau, now that's another thing. Unaweza kuwa umesahau, which is not good. Try not to forget. But kama umesahau, remember ukuwa umeka stop loss. So stop loss hapa ndo inakujanga kukusave, because it can wipe out your account if you didn't put stop loss. Sawa. Utapata ulikuwa umemake pesa mingi, alafu hiyo pesa yote unairudisha kwa market na some more. Sawa. Any questions? I think I am done with the class. And we have
So that applies for all manner of traders, day traders, swing traders, everyone.
Yes, everyone. Very important, because it will, and then fundamental normally directs the price. Like that information, that's what I was telling you, tulianza na interest rates. Fed, hiyo kenye wanaongeleleanga hapo inakuwa story like for 2 hours, wanapiganga tu story. But mainly watu traders wanasikizanga tu ndo wasikie interest rate imetajwa, wanasema je, wakisema quantitative easing, my friend, kama unajua inamaanisha nini, you will become a millionaire there. You get? So that's what it means basically. So if you had, they are very, very important information, because it will affect every kind of trader, whether you are an investor, whether you are a day trader, whether you are a scalper and blah blah. Because investor, tuseme Nairobi Stock Exchange, imeambiwa rates zinafanyika hivi na hivi. You see prices will tend to go up, like prices so hapo, but usikie interest rates zimefanya sijui nini, uko like okay, nilikuwa nimemake like 200%, wacha ni offload some of the profits, unaona. But wakikupea such information, uko like wacha sasa niende Nairobi Stock Exchange ninunue 1 million worth of shares, you see, because you're anticipating in the next few months it will make you like 100%, unaona. So that's why that information is very, very important, and it affects every kind of trader. Kazi ya trader tu ni price discovery, ni kusema hii price nataka itoke hapa hadi pale, hapa hadi pale. Hiyo ndio kazi ya technical analysis. Kazi ya fundamental analysis ni kuipush, like ni twende sasa, twende hivyo. Kama war, of course, sai war ikihappen, unajua definitely something will happen. No.
Mm-hmm.
Yes. Any other question?
Yeah. So for fundamental traders,
Mhm.
they are they have to always be informed to
Wait, wait,
know their sources.
yes, and then
Hmm?
understand what that data means. They are data based, like wako based on data. Now, one thing to simplify, I like even me when I'm trying to understand fundamentals, even if I'm an economist myself, I like using ChatGPT. So reports, for example, nikiona gava imetoa reports sijui imesign some bills in relation to finance, I just download that information, I take it to ChatGPT and research. For example, kuna mergers ya banks sahii, I think NCBA na Stanbic, if I'm not wrong.
Mm-hmm.
Hiyo ni as an investor in Nairobi Stock Exchange, I need to know what that means. But ndio nisijifanye I'm right, I take that information, take it to ChatGPT, tell it to analyze, and I have an informed decision. So that's what I can advise. Maybe you do if you don't understand. It doesn't have to. And then with ChatGPT kwa settings, enda uandike hapo be factual. Tell me the factual. Unaambia be factual and tell me the best comprehensive information. Yeah, so ndio AI ikupatie, isi blab tu, isikupatie just any random information. Naambia ikuwe professional, isikuambie upuzi, yani isikuambie vitu hazifai. Unaona? So that's one way.
Mm-hmm.
So it's not hard. It's a learning curve, but it's not hard. It's just like technical analysis. So napenda kuambia watu, unaona venye uli struggle kulearn technicals, ndio kinda hiyo learning curve ni kinda similar na fundamentals. So ndio napatanga kuna watu it's easier for them to understand the fundamentals. Like one of my cousins, yeye ana trading two fundamentals, and he does it so well. So he uses, hiyo ndo stronghold yake, unaona. But unajua yeye saa amesoma sana,
Mm-hmm.
so anajua hizo mambo zote akodi na PhD. So hiyo ndo sekta yake. So mi sasa niko technicals, unaona. So there are
Mm-hmm.
those two types of traders. So you can
Ah,
combine.
that makes a lot of sense.
So yes,
Mm-hmm.
so you can use both separately. Because of course the fundamental guys still know technical, but they apply the knowledge, but they mainly trade fundamentals. Same case na technical. Tunajuanga mambo 1 to 3 za fundamentals, but sisi strictly tuna tradingi technicals. Does that make sense?
That makes a lot of sense. That according to data and statistics,
Mm-hmm.
I, I have a feeling that there are more technical traders than fundamental.
Sorry?
I don't know why I have the feeling that we have more technical traders than fundamental.
Yes. Actually, yes. We do have. That's very true. Because it's hard. If you try doing fundamental, okay, to some people again it's easier. We can say we are different. So to some people it's easier for them to use fundamentals, but for us who are not savvy in that sector, we stick with technical, but we borrow, we listen, like me, I like listening. I like listening to the Fed chair when he speaks and he gets interviewed, alafu they talk even personal things. Actually, hebu siku moja nitakutumia link usikize siku moja, like a podcast. It's
Mhm.
like a podcast and very interesting. Hadi anasemanga right now I want to go and have dinner with my wife. I'm so hungry. Like anasemanga some random things. Like it's so chill. Na sio anaongelelea
Mhm.
economy Makio.
Mhm.
Interesting. And then it's economists. So wengi wao hapa wanakuwa so wanaongelelea vitu interesting. Wanasema I read this book. One of my mentors I was looking up to uko like wewe Fed chair wewe ulikuwa unalukiwa up, like they make it
So
look
they
cool.
try to humanize the whole thing of it. People are on their nerves with what
Yes.
they're gonna say.
Yes, it's so chill. It's like a family getaway. It's like ama colleagues wako hapo tu event ya socializing or something.
Mm-hmm.
Yeah, it's so interesting. But you can, that is for the Fed chair. Some of them are hyper, like Trump was trying to say that he wants to fire Powell, and I was like, I surely you want to fire this guy because ati hakuwa anataka afanye, and then it's independent. The central bank is independent from politics because they have
Mm-hmm.
to make sure the economy is going well.
Mm.
So ikileta politics hapo sasa hakuna economy, it will crumble, itakuwa so bad. So again, they have to be professional, but they try to humanize it, as you said, to make it simpler for the normal mwananchi. But they use some jargon, si ngumu, some economics terms, not kuna trading terms na finance terms, but jargon yao is more of economics. So ukisikia wakiongelea some of the hard things, maybe you can just Google and see what maybe it means. But it's not that hard. It's actually interesting to listen to.
Mm-hmm.
Yeah. And then they dress so well. Oh my gosh. I'm always like, wow, you guys. They feel like they smell well. I would love to go to one of them, God willing. They may have so many dreams, but I love watching them and listening to them.
That's good to do. So I'm just wondering, why maybe other people have their powers who speak.
Mhm.
Why can't we have a similar one here in Kenya? We don't have many investors.
You see, we have the minister for the central bank chair, anaitangwaje, the governor of the central bank. Ni venye maybe usomangi nini. So fundamentals ni kama mtu mwenye ananunuanga business daily. Unaona mtu mwenye amezoea kununua hiyo gazeti. Also ni mtu
Mm-hmm.
fundamentals because they are there. So they normally toa those reports and they have those events. Yes. So we have ours in Kenya.
Oh, and they are open for people to attend.
Yes. And it's broadcasted live. Hata kwa news naonanga wakionge nini, but ukitaka news source kuna Bloomberg channel. Hizi channels za finance. Time inaenda kuisha. Should we open? I don't know if you have any other question.
Um, I was wondering,
Mm-hmm.
if someone approached this as like a lifelong learning
Mm-hmm.
thing, is that a good thing?
The fundamentals.
Yeah.
Yeah, it's good. It's good. It's what you're comfortable with. So you can use it to swing trade. I think many swing traders use, they are also fundamental traders. So you can take that approach and you can choose to learn. It's actually very interesting, um, in my opinion. So I would encourage you, if you want, you find it to be nice, because you're gonna catch good trends if you are good in fundamentals. And trends have so many pips
Mm.
in them. So for example, if you are a fundamental person, you would, the way as you are catching like 5,000 pips in a month, you would have captured like in one trade only, like 20,000 pips. So that's the advantage. No.
Mm-hmm.
So it's good if you feel, and it's not actually, I tell people it's not that hard. I don't know if I'm saying that in the point of being an economy. It's just additional work on top of technical, but it is very manageable. I think if I wasn't coding, I would have also gone that route. It's just that I love coding more. So I don't have the time. So mimi ikifika time ya news huwa naangalia support resistance iko wapi, hapo good. I wait 30 minutes before, 30 minutes after, and sa yenye najisikia niko poa, I know I just normally look at the levels and trade that move, but I'm very, very critical of the stop loss. So I trail. Sometimes if I'm taken out, I'm good. There are other people who take the approach of like ukikuwa na nini, wanaekanga two trades, wana hedge. kuna trade moja juu ya sell na buy, they do both. So and then they capture the move yenye inani juu zote ziko na stop loss. Yeah, stop loss inatoka, hiyo ingine inakuisha hiyo ingine. So there are different approaches to that. Any other question?
When let's say for example you're having a conversation with a hedge, sorry, with someone who does fundamentals. Say you have a fundamental expert and then you have a technical expert. Do you guys normally see similarities amongst your conversations, ama you'll be totally different?
I've never experienced that per se. But if I can give the example with my cousin, he's normally very chill. He studies the market like he's studying for a class. So you see him maybe in his office, like he saves like 2 hours just to study the market, like those fundamental things to at least guide his decisions. Yeah, so like I don't know, it's been a while, but if you just ask him, okay, what do you think? Ataanza kuambia sa stories za okay, Fed walifanya hivi na hivi, wakafanya hivi, so hii inamaanisha hivi na hivi na hivi, oh, blah 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 blah, and then that will guide his decision. Similarly for stock, watu wenye sana wengi wanakuanga affected na this ni the stock traders ama stock investors. Fundamentals they have to look more. For example, mi nikienda kununua shares now as an investor, I don't go just buying based on technical analysis. Yes, technical analysis will play, but I want to see much more. I want to see the EBITDA. Some of the EBITDA. Yeah, you know the word. Their business.
Yeah.
They want to see the financials first of all. They want to see all those things. Ndo ujue, okay, if I decide to buy this stock, sita end up to lose like pesa vibaya. Sindo, they have to look at the fundamentals. Unaona? So also fundamentals inaweza kukua in the macro and the micro. Tukisemanga macroeconomics ni the whole country, the whole world. Tukisema micro ni individual company, individual household. Unaona? So for example, I want to buy your Stanbic. Ni Standard Chartered ama ilikuwa Stanbic? I don't know. Standard
I
Chartered.
think ilikuwa Standard. Okay.
I don't know. Even let me just Google Standard charts to merge. So I think it's Standard Chartered if I'm not wrong. Let me see. Let's just see. Ama ni hey. Oh, ni Standard Bar. Huh?
I think so.
NCB. And Stanbic.
Hata mimi kwa nimeona kitu kama hiyo.
Ni Stanbic. Sorry, ni Stanbic. Sorry for that. Ni Stanbic, yeah. So you see that information is very critical. But before uende kuinvest unaangalia some other factors. Unaangalia juu sasa Stanbic
Mhm.
the dominant ama the dominant company, si ndio? So utaangalia financials zao nini, uangalie reasons. So unaona ukianza kuanalyze hizo vitu zote zinakaa ni kama una analyze technical analysis. Juu si tunaangalia candlestick formation, support and resistance, Fibonacci retracement, unaona? Basi sasa hii side ingine unaangalia historia hii company, mbona wananunuliwa, were they having debt, how much wealth do they have, like inaitangwaje, assets, yes, and assets, how many assets do they have. Hizo vitu tu za business tu unaangalia, ndio so una make decision. Kwa hao investors wenye walimanage kufanya hivyo, walimake, I think those 2 days it went up by 30%, I think. You see, that's a lot of
Mhm.
money. Yeah.
Yeah, it is.
So those are the things like look at. So yeah. Any other question? Guys, by the way, sijui kama nilishare screen. Sorry, I forgot to share my screen. Sorry for that. Okay, so any other question? So I had written, remember, markets are driven by human psychology, economic fundamentals, and policy decisions. Master this, combine with technical analysis, and you have a complete trading framework. The trend is your friend until it's not. Know when fundamentals are changing the trend. So that is to summarize the whole class and to tell you it's possible to use it. It's not actually a lot of work, because if you integrate fundamentals and technical analysis, fundamental analysis market gives you market direction and bias, because nilikuwa nimekwambia inakupea hiyo trend. So if you can catch that trend, it is amazing. Technical analysis inakupea precision, the precise entry and exit, and then risk management ina protect capital yako. So for example, the Fed says we have when the Fed is hawkish, the USD has a bullish bias. So in, for example, during those meetings and those releases, we have the technical side of it is EURUSD when it is at resistance, and maybe you're using an indicator like RSI when it's overbought. Of course, that is a short trade. So the trade will be you short EURUSD with tight stop. You manage risk 1% and then you take it 1:2 ama 1:3 risk reward, and you've made your money. Hivyo ndo example sasa ya kucombine the two. Any other question?
I think we are good for today.
Okay. I
Yeah.
hope the class was interesting. Sijakudini sana. But let me tell you, anything related to economics ama hizi big finance things, just picture it as a household. Like angalia tu kama jamii yenu, unaona? Cause inakwanga tu elevated now to the bigger picture. So venye nilikuwa nimekwambia tu macroeconomics. The small, of course there are different formulas for both, ama there are different technicalities for both, but just picture it that way, because even in economics that's how we picture. Tulikuwa tunajipata ulikuwa nafikiria economics is all about kustudy economy ya Kenya ama ya the world, si ndio? But tulikuwa na units hand in hand za household. Tunasoma household yenu huko kwenu venye mnakulanga, unaona? And then mnasoma venye kampuni, if you are to run your own company, how would you run it? Hivyo. So same case, just picture it that way. It will be very, very easy to understand. So for example, ukisikia Fed wamesema kitu kubwa kama tumecut rates, wewe badala ya kuangalia that big picture, come to your house. What does it mean for me as a citizen and in my household? I am able, nimesema rise, nini watapandisha rates. Unasema if I had money right now I would make 12% interest on my money, but juu sahii sina pesa, would you go rushing to nini to borrow money? Si unaona utakuwa unalipa banks pesa mingi sana. So those are the decisions. So you put now that information to the market. Unaenda ukiangalia market yako. Gold, what does it mean on gold? Prices are gonna go up, prices are gonna go down. Follow that. But sasa ndio confuse, enda tu na flow, start small, enda ukipanda, and then I think utakuwa poa. Mimi still it's my I've tried looking for a mentor to mentor me on fundamentals pekee, bado sijapata a good one. Yes, sasa ndo nakwambia, even if I know so much, I would love to learn from somebody more on it, but I know it's a learning curve, a very huge learning curve. So if I have the time, I can go and that. So itu ni ya kukuchangamsha, like kuona the possibilities. There's so much money to be made. Watu wa fundamentals wana makingi pesa, hata wanaweza shinda traders. They can make so much money. So much. So they can make so much money, let me tell you. Because they are going with the trend.
Yeah. Mhm. Yeah, it's encouraging to hear that kwa sababu someone who when someone listens to this class and they thought that everything was about sticking to technicals,
Yes.
They can be encouraged.
Yes. They
Yeah,
can
they can be
go
encouraged. Yeah.
they can go the route of fundamentals. It's not, and then that's why you hear swing trading is easy. So unajua sasa swing traders wanaendanga na hiyo notion ya some sort of investing, and it's easier on the mind because mtu ataenda tu aseme okay, Fed alisema hivi, and you may be surprised, those news are listened to like it's like a drug. You see people are all over. Even I think on social media you can see NFP. Kila mtu ako excited for NFP. They know they're gonna make a lot of money, you see. So I think one more thing I need to add is some news prices normally priced in already. So some moves may not be so huge. Some news may not have so much huge moves. So what you need to think about is, was it priced in already before, or is it going to be priced in after? So that's also another factor, because NFP maybe this month inaweza tolewa na haina so much momentum. The reason may be unaweza angalia 2 days before, were there huge moves like in gold? Yes. So you don't expect the moves to be so high. So another way I like to do personally as a technical analyst, before major news, I go and check the candlesticks, the 1 hour candle or 4 hour I see previously, and the measure. I know that candle is this and this size. So I don't expect, like for example, the market's hapa haiko tu, so nikiangalia hii alafu the market hiyo siku ya news haikuangi so much, inakwanga hivi lagging, like inajikokotanga hivyo. So ukiona imejikokota hivi time ya news, we expect a very huge move. But sasa some moves can be from here, let me take a measuring tool, can be from here to here. Hii ni news moja. Let me quantify it for you. You see this is around this is around 1,200 pips. It can come like that. Moja. Almost 1,500 pips. Almost 1,500 pips. So for example, ukuje uweke stop loss yako juu hii ni resistance. Ukuje uweke stop loss yako hapo. Ukuje all the way to this support. And then uweke stop loss somewhere there. Unaona umekula 1471 pips.
Mhm.
Huge move. So mtu mwenye alikuwa na trade 0.01 lot hapo angemake $147 tu hivyo. Mtu mwenye alikuwa na
Mhm.
trade 0.1 angemake 1400 and mwenye angekuwa na trade one lot angekuwa amemake million, almost 2 million Kenya shillings. Unaona?
Mhm.
So that's that's why I'm saying those days are very, very massive. Yeah, so if you don't have any other question, let me know.
I can ask about specifically gold now that we are here.
Mm-hmm.
I'm beginning to think that I have probably maybe interacted with fundamentals once in a while kwa sababu I don't know when it was I saw China is really buying gold. It's like people are moving away from USD. So in my
Mm,
head, I'm thinking gold in the long term, someone can put money, even if it's a very conservative lot, hata kama ni 0.01 or
mm,
0.05, and
mm,
then leave it.
yeah.
Does that make sense?
So gold is a reserve currency. So
Mhm.
it's many currencies. You can study the history of gold, but US ilikuwa iko backed na gold. So gold is very important because it's inaitangwa the reserve currency or something. It's
Mhm.
golden standard. I don't know the proper information to give you, but it's known as the golden standard. That is, gold is much more than money. Unaona hii dola na nini nini, gold iko bigger than money. Okay, so
Mhm.
currencies are backed by it. So you see China going buying gold left, right, and center, putting more reserve, adding on their gold reserve. What they are doing is they are they are strengthening their economy, like they are protecting their money because they are backing their money. They are putting their money in that gold. So that means gold, hata ukinotice kama hizo news zilikuwa zina happen recently, inaweza kuwa ili lead to this movement. Unaona? So when you see a strong economy buying gold, that asset will go up. Another one was BTC. US walikuwa wamesema wanataka kwanza kununua BTC. Okay? They wanted to
Mhm.
buy a lot of BTC. And you see this move, it didn't just come out of nowhere. It's because US said they wanted BTC. Unaona? And then
Mhm.
China accused them they want to hide BTC. US wants to hide in BTC so that they reduce their loans, their mini loans that they have. Ikakuja
Mhm.
ikafuata hii history ingine. So okay, this was a culmination of different things, but hapa katikati kuna US walikuwa wameamba nyinyi mnataka kunini tu mna nabishania tu hizo vitu tu za gold na BTC cause on one hand they want to make BTC like gold, but then it's
Mhm.
impossible. Naona, so they are told no,
Mhm.
no, do this, do that. So hizo vita mingi, but you see BTC ilipanda, gold pia nayo ikapanda, stocks nazo zikapanda, because stocks is also another way, because now ukisikia government ama Fed wana buy shares ama wana buy bonds mingi, of course shares bonds na shares zitapanda ama
Mhm.
stock market will go up. So ukisikia similar information, and again, I'm not so good with it. So I think what I can encourage you, what you can learn most, if you have any investor friends, I think they'll be the
Mhm.
to explain they'll be the best to learn from fundamentals.
Mhm. Mhm.
Hawa wasi wanapenda investments and so on. That is my take.
You're right, by the way, because there would also be probably posting and pulling articles and posting somewhere, and people will be reading and following.
Yes, yes.
Mm.
So if you want to learn, there's a place I like going to when it comes to shares and all that. Since kitambo, since my school days, ilikuwa inaitwa Wazua. I don't know. It's a forum. My internet is down. So kitambo NSC, like all information about NSC ilikuwanga hapa kwa Wazua. So once it loads, I don't know if the website is still on, but it used to be a very active one. Yes, so you can come. You can come and it's a forum. It's like Reddit. You can read from there. I might even ask people on Reddit. I think I told you about Reddit. It's good. It has
Mhm.
very good information because people don't lie. It's like Stack Overflow. Stack Overflow is for programmers, but it's like that for now everyone else. So it's a good one. You can get very good information there. Sawa. So let's end the class.
Okay, when you have good Reddit threads or links,
Mm,
you
sure.
can forward me, then I can join and follow those conversations.
Yes, yes. But they are there. You just like Wall Street bets. Okay, you can just go and search
Mm-hmm.
according to your interest. There's a search, it's a search engine as well. So you search whatever you want and then you read through and then you see the top. But I'll send you some of them that ni venye sisomangi sana, naendanga tu hapo nikiwa na swali. So when I want to ask somebody a question, I just post it and then I find somebody has answered me. And it's very good information.
Ah, okay, fantastic. Reddit reminds me of the issue of Robin Hood. I
Mm-hmm.
didn't even follow exactly what happened, but I know it stemmed from a discussion on Reddit.
Yes. Um, yeah, it was Wall Street bets. And
Mm-hmm.
it was the GameStop thing.
Oh, okay. Mm-hmm.
So they made the GameStop share because it was priced, it seemed to be a penny stock. A penny stock is easy stocks za bob 10 bob hivo. No, bob hizo 2 bob 1
Mm-hmm.
bob. So standards za US you can imagine.
Mm-hmm.
Dollar less than a dollar is a penny, zinaitwa penny stocks. So, but the people in Wall Street bets they wanted to revenge to the hedge funds because they wanted to short that stock. But the people on Reddit, because many are gamers and all that, they still had hope in the company. So the months building up to that event, there was because kuna hiyo information, it's this industry is information based. You look at different information, sana sana the stock
Mm-hmm.
market. So I don't know exactly what happened, but there was a YouTuber also involved. Alikuwa anashinda akisema kama venye pump Bitcoin itaenda juu. So kijana alikuwa anashindanga akisema hii GameStop itaenda juu kwa sababu ya hizi gaming, hizi consoles, hizi za kugame, hizi ma PS manini hizo itaenda and he was right, but financially in the setup ya finance, this company is not supposed to be here in the first place, unaona. So
Mm-hmm.
they took those numbers because they are investors, they pushed
Mm-hmm.
that price up. So in turn, and it took months, it didn't happen like in a week or anything, it took a while. So these guys
Mm-hmm.
kept on buying until, because unaona investors our hedge funds, they also do the same thing the way we are just doing things, but they do it in increments. So hao walikuwa wanashinda wakishort, wanaendelea wakishort, wakiendelea kushort nao wana buy, wana pump. So nikawa walikuwa wanalipizia hedge funds, you get like price.
Mm-hmm.
You see the retracements zinaenda zikisell hivyo hivyo, but hawa ujanja wenye wanatumia ni iki retrace wanaendelea kubuy, so the money, you see the give and take, So it's like they were punishing the hedge funds. So it
Hey,
led,
that was good.
yes. So it ended up going up. But it was that rallying of the community on Reddit that made it go up.
Mm-hmm.
Unaget. So ni kama tu sahii Bitcoin waseme tunataka kuangusha Bitcoin ikuje to $10,000. But
Mm-hmm.
the community ya Bitcoin wako na so much faith in Bitcoin, okay? Hawezi kubali. So they go in increments, wanangojea wa short. Then wakishort, of course, market itaenda chini. They come collectively, they like all the retail traders in the world wakuje pamoja against the hedge funds.
Mm-hmm.
That's
Now,
how
those hedge funds were not seeing what was happening.
they were, but you see that information bias, kuna kaujanja ilikuwa ina happen. That's why now the information now is being held on, ama the conversations are being held on Reddit. Ni kama
Mm.
Discord, mkuwe na Discord, mseme tunataka kufanya hivi na hivi na hivi, mnapanga.
Oh,
So
and hedge funds, that's not their source of information.
ama wanadharau, because you see hedge
Yeah,
funds have a lot of money. But so the
yeah.
best way they did were doing it, and it was public knowledge, because even it was on YouTube. That YouTuber alianzisha hiyo, sema mi siwezi kubali nini, and that YouTuber ended up with almost billions, kama si half a million, I don't know. He ended up with, sorry, half a billion. So he ended up
Wow.
getting so much. So many people, our retail traders became rich out of that. But also they had the interest of gaming. You see the way boys are, they love nini
Mm,
gaming and all.
mm,
So angekubali like mnasema aje hapa, no, hivyo. So
mhm,
that's how it happened. Just the way tuseme kama gold. Sorry,
mhm,
gold, Bitcoin. Mwamwesa kusema gava iseme no, we want to punish Bitcoin. Bitcoin is bad, it's evil. But you know Bitcoin is
mhm,
meant to help, ama unajua the
mhm,
importance of Bitcoin, you see. So you
mm.
come, all of you in the world, the traders from all over the world, and say, no, we have, our goal is to make sure Bitcoin does not go to zero.
Mhm.
That's how,
No, that's amazing.
mm, so that's how it happened. Like they were trying to save the company in short.
Mhm, mhm.
Yeah, but
I hope that company are rewarded those people. I'm at
as
how.
they can't reward them because it's just the market. So the people who are buying, they're the ones who ended up, because many people became millionaires from that event.
Mhm,
Very many,
mhm,
especially from that Reddit. So what happened ni government ilianza ku control some of
mhm,
those things, because now you are not supposed to discuss vitu kama hizo, like some rules of course had to come up. Yeah, but
mhm.
iliharibu sounds. Anyway, it's just a funny thing anyway. So
I think I think it's democratic. I think they should leave people to save or bring. Oh, because they were like it. It can potentially bring down a company as well.
yeah,
Like
yeah, it can.
oh,
So it's not fair at the end of the day. Okay, yes, they were painted in a bad picture,
mhm,
but if in the grand scheme of things, it's not wrong. Them, they were passionate traders. That they were passionate about this company. They didn't
mhm,
want, so they had to take matters in their own hands. But fundamentally,
mhm,
that business was dying.
mhm. But
Yes,
the users were enjoying
yes, they didn't
themselves.
want to let go of it, in short, and they also wanted to
Mhm.
punish, to show, to make to pass on a message like, you hedge funds mmetuzoea sana, acha tuoneshe venye,
Mhm.
of which it's not at, yes, you can't compete against funds, but
Yeah, you can.
they
Mm.
showed they showcased the possibility. Okay, Rehema, nimeongea sana. I hope the class was amazing. And I don't
The
know.
class was very interesting.
Okay, good. It's good,
Mm.
and I'm also yet to learn more on that, on this topic very, very well. and I hope to become also good in fundamentals, like an expert.
Mhm.
I'm not yet there, nowhere close. There are better people who can handle this. But
Mm.
yeah, I hope you'll be one of them. So,
I hope so too. And I hope maybe one day, maybe when you get into podcasting or interviewing or featuring, you can invite the experts into a conversation with them so we can also learn more from them.
okay, that would be awesome. So for now,
Yeah.
I need you to tell me if you will do the homework, if you've done the homework, so that next class can be just talk over. It's the final class again. You are going to carry the class.
Mhm.
So I don't know if you'll be able, your laptop will be okay by then, but you'll tell me, hopefully on Tuesday.
It, it should be okay. I don't know. There's some upgrade I was trying to do and some like new installation.
Mm-hmm.
No, I'll let you know. I will definitely let you know.
Okay, so thank you so much and
Yeah.
have a nice day.
You too. Thank you so much. Enjoy your weekend.
Okay,
Okay, I appreciate it so much.
okay, bye bye.
Okay, bye.